Okay, now let's go to journal entries. Since we know when to journalize, we have the 5 dates stated earlier. So the first date is at the time of sales. So when the sale happened, then you record cash or accounts receivable depending if the customer paid already. If paid already, then cash. If not paid, then receivable, accounts receivable. Then credit, okay, CR is credit, DR is debit. Okay, so credit sales, okay, to recognize the sales that it happened. Okay. Second is when the premiums are purchased. Okay, so those premiums, the items that the goods or items that you will be giving out to your customer. Okay, when you buy that items, okay, when you buy that items, you debit premiums. Okay, premiums, since they are items, goods physically there, so these premiums are considered assets. Okay, so we debit assets, which is the premiums. Okay, since this is part of the operations, normal operating of the business, so this is the current asset. Okay, then we credit cash when we paid, when we purchased the premiums. Next is distributed to customers. So when we distribute the goods already, the premiums, then we debit the premium expense. Okay, so we recognize the expense. Since we are only giving it out to the customers, we're not asking the customers to pay for it. So it is our expense. So freebies na siya, mga freebies. Okay, that's what we call freebies. Okay, so then we credit the premiums, the asset. Okay, to reduce the assets. Okay, so we credit premium. On the fourth date is the outstanding premium, which is to recognize outstanding premiums at the year end. So, pilay na bilin sa katong premiums nga wala pa nato na distribute. So, unsa man na nato? As I mentioned earlier in the discussion of chapter 1, we need to recognize the expense at the time when it's related to the actual sales. Okay, this is the actual sales. This is a freebies for those customer who bought at this time. Okay, so at year end, if we still have premiums which we haven't give out to the customer, then we need to record the expense now. Okay, this reporting period, which is at the end of the reporting period. Okay, so we debit the expense, then we credit the liability. Okay, so it's an estimated premium liability. Okay, why is it estimated? Okay, estimated because we actually know how many premiums we have left, but we don't know whether the customers will be redeeming or collecting those freebies. Okay, so that's why it's estimated. We are not sure whether the customers will collect the freebies. Okay, so estimated premium liability. Okay, the fifth is subsequent year distribution. So since at year end, for example, at year end of December 31st, 2020, we already recognized the liability account. So on January, if we continue to distribute or the customers continue to redeem their freebies, then we need to reduce our liability. Okay, reduce kaya tumanggi panghatag. Okay, so reduce our liability by debiting the estimated premium liability, and then we credit the premiums. Okay, premiums, the asset account, the current asset account. Okay, so there are 5 dates that you need to remember. Okay, 5 dates you need to remember on our journal entries. Okay. Okay, let's go to our illustration. Okay. Entity manufactures a certain product and sells it at 300 per unit. Okay. A soup bowl is offered to customers on the return of 5 wrappers plus a remittance of 10. Okay. So the bowl cost 50 pesos and it is estimated that 60% of the wrappers will be redeemed. Okay. The data for the first year concerning the premium plan are summarized below. Okay. What's our first entry? Our first entry is at the time of sales. So at the time of sales, recognize the sale. So this is given. 10,000 units at 300 each. So 3 million. So we debit. So we debit cash for the sales or accounts receivable if it's not paid. Then credit sales. Okay, 3 million. Okay. Second is to record the premiums purchase. Okay, we purchase the premium, which is the soup bowl. Okay, we purchase the soup bowl. So the soup bowl purchase is 2,000 units at 50 pesos. So we record the purchase. Okay, we debit the premiums, specify. Okay, 100,000. Then cash if we have paid it. Okay, so next is the third date is when the customers actually redeem the freebies or the premiums. Okay, it's mentioned here that wrappers redeem 4,000. Okay, it's mentioned here that 5 wrappers for 1 soup bowl. Okay, so kung 4,000 na siya, pila man ka soup bowl ang na redeem. So 4,000. So 4,000 wrappers divided by 5. Okay, kay 5 man. So we have 800 bowls ang atong palit. Okay, so 800 bowls. So ang storya is muhatag og 10 pesos ang customer together with the 5 wrappers kada redeem sa soup bowl. Okay. So maka-receive ka og pila man 800 times 10 is 8,000. So naka-receive ka og 8,000. Okay? So we debit cash. Okay. Second is ang cost sa bowl. Nag-recognize man tayo sa premium soup bowls, right, for each item. So we reduce the asset of the premium. We reduce the asset, so 800 times 50. So that's 40,000. Okay, that's the cost of the soup bowl. Okay, so the premium expense, okay, the difference between the 50 pesos, mga cost, less the 10 pesos nga bayaran sa customer. So, ang actual expense nimo is only 40. So, 800 times 40 is 32,000. Okay? So, mora to yung muhang expense kay amo na yung muhang premium expense kay partially gibayaran man ka sa imuhang customer. Okay?